There are a lot of people selling algorithmic trading systems right now. Signals, bots, copy trading systems, strategy subscriptions. The internet is honestly full of them. So the question isn't whether algorithms exist. The question is which ones are actually worth trusting with your hard-earned capital. That's what this entire video is going to be all about, and I promise I won't speak too long. Let's start with something that most algorithm providers won't actually tell you. The majority of retail trading algorithms are black boxes. You don't know who built them, what markets they trade, how they were tested, or whether the results shown are actually real or just back-tested fantasy. At Vincere, every single algorithm we offer was built entirely in-house by our own team from the ground up. No licensed third-party code, no repurposed strategies. We own every line of logic, every rule, every parameter. That matters because when something needs to be adjusted, improved, or stress tested, we can do it immediately ourselves and roll out those updates quite quickly. Let's talk about what we actually trade and why it matters. We trade exclusively on the US futures markets, not Forex, not options, and not individual stocks. Why does that matter? Well, Forex is largely unregulated, subject to broker manipulation, and notoriously difficult to build consistent algorithmic edges on. Individual stocks carry event risk. One earnings miss, one lawsuit, one bad headline by a CEO, and your position is destroyed overnight. Futures, specifically US index futures like the S&P 500 and NASDAQ, or even instruments like gold and oil, they're all federally regulated, deeply liquid, and trade nearly 24 hours a day. They behave with a consistency that rules-based systems can exploit repeatedly over time. No gambling, no speculation on whether one company will beat earnings, just systematic rules-based execution in one of the most liquid markets on the planet. Here's something the big institutions figured out a long time ago. You don't run one strategy, you run many. Citadel doesn't deploy just one algorithm. Millennium doesn't just run one fund. They run dozens of uncorrelated strategies simultaneously so that if one is down, others are working. That diversification at the strategy level is what creates consistency over time. And that's exactly what we fundamentally have built here at Vincere. We have 11 algorithms, each built with different logic, different timeframes, different market conditions in mind. They are designed to be non-correlated with each other and non-correlated with the broader stock market. So when the S&P drops, our algorithms don't just lose money. In fact, some of our best months have come during periods of significant equity market stress. Simply put, if the markets are moving, the algorithms are printing. But having 11 algorithms means nothing if the quality is not there. Before any algorithm at Vincere goes live, it goes through a rigorous development and testing process. We look at robustness across thousands of market scenarios. We test for overfitting. We stress test against crashes, high volatility periods, and low liquidity conditions. We run it on walk-forward data, not just clean historical backtests. And then it goes live on a demo environment before it ever even trades a single dollar of real capital. Only after it proves itself in live market conditions after a certain period of time, then it actually gets deployed. Now, most algorithm providers backtest on clean data and call it done. We don't release anything we wouldn't trade with our own money because we do trade it with our own money. Let's talk about risk management too, because this is very important, and this is where most algorithmic offers don't like to talk about. Our algorithms use no overnight leverage. Positions are not held open overnight into unknown risk. We trade in highly liquid markets with tight bid and ask spreads, which means entries and exits happen at the prices we expect. Every trade has defined risk. Every trade has a defined exit for a stop loss and an exit for take profits. Downside is controlled by design. The result, since January 2020, through rate hikes, COVID crashes, inflation spikes, and everything in between, our worst single month has been approximately -8% in drawdown, while the broader equity market experienced drawdowns of 20, 30, and even 34% in a single month. Now that's not accident, that's our designed architecture. Now, let's talk about something most algorithm providers don't offer at all: compounding. Because our algorithms trade futures on a defined monthly framework, we have the ability to compound your returns. You reinvest your gains into the next month's allocation and let the algorithm settings adjust so the math can do the work for you. Starting from $110,000 in January 2020, a compounding account following our algorithm suite would have grown to nearly $1.9 million by early 2026. The S&P over that same period, with dividends reinvested, about 112%. We returned 1,600%. So now most signal services and copy trading platforms don't allow you to do that type of compounding system. They're fixed. So it's not infrastructure you can truly build on. And here's one of the most surprising things that might intrigue you. We charge zero performance fees, zero carry-on profits, no 2 and 20 like hedge funds, no percentage gains taken off the top. You get institutional grade, in-house built, live traded algorithms with a 6-year verified track record, and you keep everything you make. Now that's not the norm in the industry, but we're gonna make it the norm here with Vincere. We're not a signal group, we're not a Discord bot, we're not a back-tested promise. We're a team of systematic traders who have been live trading these strategies since January 2020. Every month is documented, every drawdown is disclosed, the performance you see is real and it's verifiable. This is the Vincere difference. So if you're serious about putting your capital to work at the highest level, the next step is a conversation. Book a call with our team, the link is below. Let's talk about what your capital could actually be doing versus what it's doing now.